Good day everyone, trust you're doing well today. Today we're talking about Microsoft's latest technical and fundamental analysis. First, let's talk about what the stock is actually telling us. One of the first thing investors look is the trend. Right now, Microsoft trend is still pointing upward. Why does that matter? Because strong stocks usually don't move up in a straight line. Instead, they make what's called higher high and higher lows. Think about climbing a staircase. You step up, pause for a moment, then step up again. That's usually heavier than jumping, straight to the top all at once. Microsoft has been showing that kind of pattern, which tells us buyers have continued to stay in control. But there is another important clue. The stock is trading above all of its major moving averages. Now, if you have never heard of a moving average before, now imagine drawing a smooth line that shows the average stock price over the last 20 days or 50 days or even 200 days. Those lines help investors see the bigger picture instead of getting distracted by daily ups and downs. When the stock price stays above those lines, it's often a sign that the overall trend is still strong. Of course, that doesn't mean the stock can't fall tomorrow, right? It simply means that right now buyers still seem to have the upper hand. Now here's where things get interesting. Even though Microsoft chart still looks strong, many investors are watching one number very closely. $500. Why? Because round numbers have a strange effect on people. Whether it's a stock, a house price, or even salary, people naturally pay close attention to nice round numbers. In the stock market, these are called psychological levels. A psychological level is simply a price where many buyers and sellers focus their attention. Now, if Microsoft moves above that level and stays there, some investors may see it as another sign of strength. But if it struggles to break through, some traders might decide it's actually time to lock in profit. So that single number, right, could influence what happens next. But chart only tells us part of the story. To really understand Microsoft, we need to look at the business itself, and this is where Microsoft continues to impress many long-term investors. The company isn't relying on just one product. Instead, it has built several powerful businesses that works together. Let's start with Microsoft 365. Millions of businesses around the world pay every month to use Word, Excel, Outlook, Teams, and other Microsoft software. This is called recurring revenue. Recurring revenue simply means customers keep paying you again and again instead of buying something just once. Investors love this because it makes future income much easier to predict. Then there is Azure. Azure is Microsoft cloud computing business. If cloud computing sounds confusing, here is an easy way to understand it. Instead of companies buying their own computers and servers, right? They rent computing power from companies like Microsoft. It's a little like renting electricity instead of building your own power station. Today, more businesses are moving their system into the cloud because it's cheaper, more flexible, and easier to manage. And now, artificial intelligence is making cloud services even more important. Why? Because AI needs enormous computing power. So basically, every time an AI model learns, answers questions, or creates something new, it uses powerful computers running in massive data centers. Microsoft owns many of those data centers through Azure, right? So as AI grows, demand for cloud services could grow too. That's one reason investors are paying so much attention to Microsoft's cloud business. Now, let's talk about AI itself. Microsoft didn't just invest in artificial intelligence, it started putting AI into products that businesses always use every day. For example, Microsoft has added AI features into Microsoft 365 through Copilot. Developers now use GitHub Copilot to help write computer code faster. Businesses can also build AI tools using Microsoft's cloud platform. Now, instead of depending on one AI product, Microsoft is trying to spread AI across many different parts of its business. That creates multiple ways to make money over time, but every investment has risk, and Microsoft is no exception. The first risk is competition. Microsoft isn't the only company chasing the AI opportunity. Companies like Alphabet, Amazon, Meta, Nvidia, OpenAI, Anthropic, and XAI are also, investing heavily in artificial intelligence. Technology changes quickly, you should understand that. Now, the company leading today isn't guaranteed to stay ahead forever because the tech AI sector is highly competitive. That's why investors keep watching who launches better products, who wins more customers, and who turns AI into real profit. The second risk is valuation. Valuation simply means how expensive a stock is compared to the money the business earns, right? Microsoft is a premium company. Investors are willing to pay a higher price because they expect strong future growth. But here's the catch. When expectations become very high, even good news might not be enough. Now, a good scenario is imagine a student who always scores 100% on every test. If that student suddenly scores 95, it's still an excellent result, right? But some people may still feel disappointed because they expected perfection. The stock market often reacts the same way. When investors expect amazing results every quarter, anything less can cause the stock to fall, even if the business itself is still doing very well. Another risk is regulation. Governments around the world are paying much closer attention to large technology companies. Issues like competition, cloud services, and artificial intelligence could all lead to new rules in the future. So, no one knows exactly what those rules will look like, but it's something investors continue to watch closely. There is also one more challenge. Artificial intelligence is expensive. Microsoft is spending tens of billions of dollars building new data centers and buying advanced computer chips. That's a huge investment. The hope is that customers will keep using AI services enough to earn back those costs over time. If that happens, the investment could pay off in a big way. But if AI demand grows more slowly than expected, those heavy spending plans could, put pressure on profit for a while. So now, where does all this leave investors? Let's think about three possible paths, right? The first is the bullish path. In this case, right, businesses continue adopting AI quickly. Azure keeps growing, Microsoft keeps reporting strong earnings. The company proves that its AI investments are turning into real profits. If that happens, the stock could continue moving higher over the coming month. The second path is a more balanced one. The business keeps growing, but not as fast as investors hoped. Now, instead of the stock falling sharply or climbing rapidly, the stock will spend time moving sideways while the company's earnings gradually catch up into its valuation. And finally, there is the bearish path. Maybe the economy slows down, maybe AI growth doesn't happen as quickly as expected, or maybe investors simply decide the stock has become too expensive. In that case, Microsoft could experience a meaningful pullback, right, before finding support and continuing its long-term journey. Remember, none of these paths are guarantees. They are simply different possibilities based on how markets have behaved in the past. So, what's the biggest lesson here? Microsoft isn't just another technology company. Over the past several decades, it has successfully adapted again and again. It moved from operating system to office software, then to cloud computing, and now it's betting heavily on artificial intelligence. The truth is, very few companies have managed to reinvent themselves many times like Microsoft, while staying among the world's largest businesses. That's one reason many long-term investors continue to watch Microsoft so closely. At the same time, even great companies can become expensive. A great business doesn't always mean a great price. That's why smart investors don't just ask, is this a great company? They also ask, am I paying a fair price for it? That simple question can make a huge difference to your long-term returns. So before you buy, don't focus only on the excitement around AI or headlines about record highs, right? Look at the business, look at the valuation, look at the risk, and most importantly, make sure the investment fits your own financial goal and your own time horizon. So now, do you believe Microsoft is still one of the best long-term investment in the market, or do you think the stock has already priced in most of the good news? I would love to hear your thoughts. Now, if you're looking to get regular stocks recommendation and stock market tips for both Nigeria and US stocks, I have a Telegram channel where I share frequent market insights to enable you beat the market. So if you're interested, you can find the Telegram link in the description box of this video below. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.